Macquarie Group has announced a full-year result of $4.7 billion for the year ended 31 March 2022, up 56% on the prior year. With strong performance from all four operating groups, 75% of income was earned outside Australia. The group declared a final dividend of $3.50, up from $3.35 last year.
Shemara, welcome and thank you for joining us. Congratulations on a strong result. Can you tell us what drove performance in the annuity-style businesses?
So first, I just wanted to start by acknowledging that all four of our businesses were able to grow their earnings and their franchise over this last year. And then looking at the annuity businesses at Macquarie Asset Management, the private markets business there was able to grow very nicely its franchise and earnings organically through both record fundraising and record investing in its core infrastructure area, and really good adjacent expansion into real estate, into private credit, into agriculture and transportation. And then in the public investments business, we were able to grow inorganically very substantially with three material acquisitions with Waddell & Reed, AMP Public Investments and CPG. And then in banking and financial services, the ongoing growth in all of our books through our approach of having a customer-focused digital bank offering saw growth in our personal banking with the mortgages book, in business banking, in the funds on the platform in wealth, and also the deposits to support that.
And what about the markets-facing businesses?
The market-facing businesses also had very strong growth there, and starting with commodities and global markets, that has three business lines. There's the asset leasing business where there was really solid contribution, but a big step up particularly from the sale of the UK industrial and commercial meters. The financial markets also, every business line in there grew their franchise and earnings. And then the commodities business had a particularly strong period given the volatility in energy and other commodity markets, which meant our teams really needed to step up to support customers, producers, consumers, etc. through this period. And then Macquarie Capital, also strong growth. There was record earnings across the franchise in terms of the advisory, equity capital markets and debt capital market services we provide, and also record result in terms of realisations of investments, but pleasingly very good ongoing investment opportunity and growth of our book there.
Now, you finished the year in a strong capital position after raising capital during the year, but all four businesses have also continued to invest capital in opportunities. Can you talk to us about some of those opportunities you've seen during the year?
Yeah, well, we managed to invest $5.4 billion into our various franchises during the year. And in Macquarie Asset Management, as I mentioned, there were three large investments or three investments across the public investments business. And then also in the private markets business, we used capital to organically grow the business through seeding new funds or acquiring new assets as seed assets for the funds. In the banking and financial services business, we were investing as we grew our loan books. In commodities and global markets, there was a lot of capital for credit risk and market risk support as volatility increased in the markets in which we operate. And then lastly, in Macquarie Capital, we were able to put a lot of money to work both in credit, in private credit and in infrastructure. But the great thing is, after all of that, to the point you made, we're finishing the year with $10.7 billion of surplus capital. So we're ready to keep supporting the businesses in the opportunities they find. And also, if there is any turn in market conditions, we should be well positioned.
And finally, what's your view on the outlook for the year ahead?
Well, look, for the year ahead and for the medium term, we feel good about the outlook for us because we have now built four very strong and diversified franchises with deep expertise in each of their areas to keep identifying and prosecuting on opportunities through market cycles. And they are supported, of course, with, as we discussed, the strong capital and funding in terms of our balance sheet and our proven risk management framework, which should support us well over the medium term.
Thank you for joining us, Shemara.